Success comes down to choosing the pain of discipline over the ease of capitulation. Thibaut. My friends, each and every day, 10 to 15 minutes, that's all we ask. Can you do that? It needs to be every day because you will not learn the nuances of the market, but it's only 10 to 15 minutes. Practice trade all you can, follow the charts, pick out some favorite stocks or ETFs. Stick with us. You will learn how to do this. If you want my book, it is available to Patreon members at any of the 3 Patreon levels for as little as $30 a month. We'll send you that book right away, along with the 3-part series, Options Made Simple, The Charting Wealth Way. Let's jump into these charts. We see stocks, bonds, and Bitcoin up, gold pulling back pretty substantially. Let's start off first, as we always do, with the S&P 500 up 0.63% for the day. Now, as we look at this week, it's a nice, strong week, and I do want to tell you guys, I've changed my analysis a little bit. I was prioritizing the short-term chart more than our other charts, and of course, we always talk about long-term trading, and it was making it difficult in the daily show for me to be able, I had to sort of break away from the analysis to show you what was going on in the weekly and the 2-day, as opposed to the primary analysis of what was going on in the half-day. I've done a recalculation of things, and actually I found that our backtest accuracy goes up. And of course, what is our goal here? What has it been since we started 10 years ago? We've gone through several chart iterations. We've gone through a number of things as we've simplified and improved our methods and, of course, our results. And what I have done now on prioritizing all 3 charts at the same percentage is drive up the backtest accuracy, and it looks like overall driving up the directional probability too. So we're going to see how this plays out. Our backtest accuracy is showing a lot of success, 70% or above for all of our calls today. Now remember, this is over the next 5 days, 5+ days, and the probability of direction is based upon, of course, what we see on all 3 charts, both the Heikin-Ashi candlesticks and the volume metrics. And of course, on each of these charts, we also have the average volume, this black line, and again, the volume itself, you see the metric on the bottom. Remember, red means opened lower than the prior close as far as the color goes on the volume metric at the bottom of each of the 3 charts. Green means opened higher than the prior close. So it does not mean negative volume. A lot of people get confused by that. I don't want you to get confused. Now, let's jump first, like I said, into the S&P. We have a 70% bullish directional probability. Our entry point's just a little bit lower than where we are right now. We're at 594.20. Our entry point's around the 592 mark. We see about a $4 move. And as we look at things, we see a 75% back test accuracy as we look toward what may happen on Monday. We can see throughout the course of the day, up move in the morning, looks a little bit more in the afternoon, decent volume there. Not a lot of volume first day of the latest 2-day candle, not even up to half. We can see where the average volume is dropping. We can see we haven't been to average volume, have to go all the way back to the Wednesday, Thursday, 9 and 10 of April. And of course, as we've said many times over the last few weeks, the last time we had average or above average volume on the weekly chart is all the way back to the 7th of April. So as we've seen the market move up, we haven't had a great deal of volume driving it up. And if you've taken our volume training, what does that tell you? The answer is given to you in the volume training. I'm going to put that training at the end of today's video. Would you watch it over the weekend? Check it out on Sunday afternoon if you get a little bit of time. Get a pencil in hand, learn how to read volume along with price. It's what the old-time traders were really focusing on, and it's something that you should really focus on when you read my book. You will get a great deal of information about how to use what volume is doing compared to price in being able to figure out what the mood of the market is, what's going on behind the scenes, and what you can expect to happen going into the future. So take that training at the end of today's video. Now let's look at where we are on the Qs. The Qs, we've got a 65% bullish over the next 5 days. Directional probability, jumping in point, a little bit lower than where we are right now at about the 519.50 mark, about a $6.50 up move predicted, 70% back test accuracy. You can again see on the 2-day chart that we have not a whole lot of volume. We're almost up to average volume on the Qs, had a big up week. So again, we can see how as the move started off strong, it has been slowing. Doesn't mean it's going to roll back over. A lot of times people do take profits. You can see here, since things came and bottomed out, popped up, pulled back, popped up, pulled back, popped up, pulled back, popped up. And of course, we can probably expect a pullback as some profits are taken and as we move closer and closer to that prior high. Haven't gotten there yet. So keep your eye on the prize. If you are in the move, then of course we're continuing with that. You can use that bullish probability to help you figure out where you should be and where you should go, but also pay attention to these candles and what you see happening with the volume. Haven't had a red candle in a while, going all the way back to originally this Monday, the 12th. So we had a nice week as things rocketed up. And of course, this is the 3rd week in a row of things moving in the right direction in stocks. Bonds down strong this week, up a little bit for the day, 0.27%. We're still bearish, 80% directional probability over the next 5+ days. Jumping in point is right around where we are now, down about $2, 85% back test accuracy. And of course, what are we looking at trading? You don't buy TLT when it's going down. TBF, the single inverse. I've mentioned this multiple times over the last couple of weeks as we've seen things strengthen in the down move. And of course, TBF, the single inverse of the 20-year U.S. Treasury ETF, it goes up percentage versus percentage. If you see TLT go down 1%, you see TBF go up 1%. That's the way the people who manage the fund with derivatives, that's the way they have it set up so that they can match the inverse movement. That's what's so cool about inverse funds. Now the fees are higher. It revalues on a daily basis. You can magnify your losses. This is why you need to practice trade it to see if you like it. Some people just say, hey, I'll just sell today, go away, live to trade another day, and when it rolls up, I'll jump in. Not interested in inverse funds. That's fine. You can be that way. But if you want some more choices and options, when a market's crashing, when an ETF is crashing, and it's a big fund like, SPY, index funds, SPY, QQQ, TLT, even HODL has an inverse fund. BITI, it's the inverse of course, Bitcoin. Now, so what do we see happening here? Well, we have had, a strong downtrend over the last day and a half. Things popped up strong in the morning and then lost a lot of it in the afternoon. We're still strong down. That backtest accuracy is 85% on the 80% directional probability of bullish down movement. That's where we are on 20-year U.S. government bonds. What about gold? Gold pulling back strong, 1.21%. And where we were yesterday on gold, we told you we were bearish at 70%. We are still bearish on gold, 60%. Expect a $2.50 movement, 70% back test accuracy. And the reason we have been strong on the pullback in gold is because we had all these weeks of unrelenting up movement, a sideways slide in late February, early March, and then a strong push up. Things topped out on the week beginning 21st of April, then a doji, then an attempt the next week, and a fail this week. And look at all the volume. Talking about little bit of volume there on stocks, a lot of volume here on gold on this weekly chart, and 3 down candles. And again, gold down strong today. So we are continuing our bullish mood in gold. Bad thing about gold when it comes to an inverse fund, there is an inverse fund. It is DGZ. There's another one or two. And maybe something's come on the market soon. But look at this. The reason I don't buy GDZ is it is literally, the sell is 650. The buy is 730 on, again, a stock that's only $7.22. So you're literally losing 80 cents just in buying it and then trying to sell it. Remember, you always buy at the highest point, you sell at the lowest point. So the minute you buy in, the most you can sell it for is literally 80 cents less on a $7.30 buy. So who would do that? I wouldn't. I mean, you automatically go in losing a crazy amount of money, and you would have to be right and right big time to be able to recover that. That's why I don't use DGZ. I use puts. And of course, if you understand puts and you know how to practice trade them, remember, we're not a stock calling service. We're an education firm, not a gold calling service, Bitcoin, or bond calling service. I want you to practice with us. Become a Patreon member. You get that 3-part series, Options Made Simple, the Charting Wealth Way. And we appreciate everyone who helps pay the freight here on providing this show to you free each and every day, as I have done now going on 10 years, and I love it. Thank you for being with us, and thank you for all the support. That's where we are with gold. Looking for it to continue pulling back over the next week. And lastly, Bitcoin. Now, Bitcoin, again, it's been about a coin toss this week. Bullish 60% yesterday, bullish 65% today. Going into Monday, and of course going into that 4th week of up movement, Bitcoin moving higher toward that high of highs. We can see it was up in the morning, maybe a little less in the afternoon, but overall 0.75%. Haven't had the volume there. We have to go all the way back to 21st of April before we get average volume or more. But again, Bitcoin moving up. It's moving up, up, up. Now, when Bitcoin hits the top, as it's done the last 2 times, or up close to that, are we going to expect Bitcoin to roll over and pull back and profits being taken? That could happen. Or, of course, it could just smash through and keep going to a new high. We will keep our eye on it. Our directional probabilities at 65% bullish over the next 5+ days. Entry points just about where we close the market day at 29.43. And we see a 70% back test accuracy. If you want our trade execution summary grid, you get that every day in your show notes. What are your show notes? That's what we email out to. If you go to chartingwealth.com and sign up, that list is never spammed, never shared. We send you the video. We send you a training video each and every day. And of course, you get the trade execution summary grid that you can use to your heart's intent on your practice trades. God bless, my friends. We'll always love to hear from you. CW@chartingwealth.com. Take care. All the best. Have a great weekend. Take that volume training. It's going to be up on the screen.